Happy Monday, everybody. Welcome back to another episode of the Breaking Bitcoin Market Update, as always, with your host, Justin Wise, lead analyst, senior mentor at CrackingCryptocurrency.com. Hopefully, everybody is doing fantastic on this wonderful Monday afternoon, as we're off to a nice start for the week in the cryptocurrency markets. Everything ticking up very nicely today for the most part. Some assets overall just kind of sideways. We've got some really good data coming out that we're going to share with you today on the price of Bitcoin. And as metrics are evolving, we're going to be taking a look at our long-term indicators. We have something that we've never seen ever on the Bitcoin chart that I want to share with you guys today. We're also going to be obviously looking at the lower time frame factors, looking at the risk to reward ratios as far as going long or going short, what you can do to protect yourselves in the event of a downfall. Also things we're going to be covering today, the absolute collapse of the British pound in the Forex markets, hitting an all-time low today of $1.039. In fact, CME futures on the Great British Pound were halted today, something that has not been very common. We're also going to be talking about Mr. Kwon and the total destruction that the financial market collapse has wrought upon the entire assets of the entire world. We're talking bonds, equities, stocks. Although I repeat myself there, in cryptocurrency, we're going to be talking about the majority of the damage there. Obviously, Italy has elected their most likely going to be their next PM, which, we're gonna talk about that a little bit. So anyways, let's get right into the charts. As always, we're very proud to host the fastest growing online community of cryptocurrency traders and investors. To stay up to date long after the show is over, make sure to join our free Discord at discord.crackingcryptocurrency.com. Link is always in the description, and links to today's market analysis and anything else you could possibly need in your life as a trader down in the description of this YouTube video. If you'd like to support the show, simply tap that thumbs up button and hit subscribe. Let's get going, guys. Wrong button. Okay, here we are. We got a lot to go over today. Shout outs to everybody in the chat. I see Jordan Stotts, Tom Hardy, Alexander Pearson, the man, the myth, the legend, and of course, Alex81SG. Let's get this crypto cracking, baby. You know how we do. Okay, so we have something that we have not seen for a while, actually ever. We've never seen this ever on the Bitcoin chart, and this is going to be weekly RSI bullish divergence. All right, so here we go. Higher low as evinced from the relative strength index indicator right here. Yet price is actually making a lower low on the chart, and so this is being picked up. On crypto Twitter. There are a couple of larger traders that are pretty well respected, have some clout on the crypto Twitter scene, who have taken this as a sign that the bottom is absolutely in. They've gone swing long here, and they're targeting, like higher prices. Probably the one that's gotten the most traction is coming from OMZ Crypto, saying that he's targeting $50,000. I think we are still far away from being able to do a bullish call like that. And again, we don't know who these individuals or these avatars are in crypto Twitter, so I can only speak from the realm of somebody who actually trades his own money and has been doing so consistently. And we just don't think. In terms like that. At least I don't. I'm not going to pull $50,000 out of my hat. You're just pulling a number out of your hat for clout and to get a lot of views on Twitter. It makes absolutely no sense. And here's the thing. In trading, there are three factors. Okay, there are three factors in trading. There are the macro. All right, what is the larger picture of the geopolitical situation or the macroeconomic situation? Are we in a period of expanding credit? Are we in a period of quantitative easing? Are we in a period of rapid expansion of the monetary supply, which most traders who are watching, that's kind of the only environment that the cryptocurrency traders for the most part have existed in an age of affluence? Are we in a contracting economic situation? Are economic outlooks bleak? Or are we overall relatively stable? So these things are very important. What are upcoming catalysts? What are potential drivers of volatility spiking? What could influence price to the upside, to the downside? What are situations that could cause large traders or large positions to be opened or closed for whatever reason, out of protection, out of greed, out of necessity? These are things that you have to have in the back of your head. You have to understand the macroeconomic picture of the environment that you're trading. And further than that, you have to understand the micro. What is going on with the asset that you're trading? If you're trading stocks, you want to pay attention to earnings. You want to pay attention to your PE ratio. You want to pay attention to news. With cryptocurrency assets, you definitely want to be paying attention to the narrative. You want to be paying attention to announcements and catalysts in that sense. And then, of course, you also want to be paying attention to the fundamentals that lay behind that. Okay, so you've got the macro, the micro, which encompasses fundamentals, and then you have the technical. Okay, and the technical it tends to be what we focus on here. However, individuals have to understand the overall macro picture and the micro picture of the specific asset that you're trading for the length of the trade that you want to be opening up. You have to take all of this into account. So while we have something quite bullish in the sense of a technical bullish divergence coming in from RSI, and while that is technically bullish, that is a technically bullish sign. Typically, that is an indication that the market is going to reverse or is very close to reversing. We do see sometimes bullish divergence, of course, be absolutely wiped out. And that's because it's not a 100% hit rate indicator. It's not a 100% rate occurrence. While it is a technically very bullish thing to see, it doesn't supersede the macro and the micro. It doesn't do that. It doesn't supersede the macroeconomic forces, and it doesn't supersede the fundamentals of the asset that we're trading. And although it is, again, I've said this many times, it is very possible or plausible that we are forming a longer term bottom accumulations zone in cryptocurrency, and that we are going to experience in the near short term or later on moving into 2023 when the Fed not pivots away from quantitative tightening, but pauses in quantitative tightening. Because as we talked about last week, the dot plot from the Fed is responsible for a lot of bearish activity or bearish sentiment in the markets, because they are estimating that that the federal funds rate will be kept not significantly higher than they expected, but higher longer than anybody expected. They are predicting that they're going to be keeping in the federal funds rate anywhere between 4 to 5% for almost all of 2023. Now, the OIS, the market actually disagrees with this, because the market is pricing in or expecting that the Fed will not be able to keep rates this high for that long. And I fall more into that camp. So I do think we will be seeing a pausing moving into Q1, Q2 2023. And I think that risk on assets like cryptocurrencies will respond very positively. Thus, the overall point of today's the point of today's update and the title of today's market analysis on the website, link is in the description for this, is overall survival, right? I have lived through 3 bear markets. This is my 4th. And the entire point, the lesson that I've learned, not only from my own experiences, but from those I've learned from those I've seen showcase great success and their ability to survive through the bear market and then push and roll their capital into success in the next bull market, is the ability to survive, the ability to not be all in shit coins, to hold your wealth in something fundamentally valuable that survives to the next bull market. That is going to be Bitcoin, Ethereum, or stable coins right now. And just being very careful, being very patient, and being methodical with your positioning, with your position sizing, and your risk management as you go through the bear market. We are trading actively through the bear market at Kraken Cryptocurrency, providing signals to our clients, doing all sorts of things, developing new algorithms, automating our current trading processes. However, we're doing that with a grain of salt. We understand the environment that we're in, and we've modified our strategy to reflect the micro, the fundamentals of what we're trading in, and also to reflect the significant change in the macroeconomic forces. You have to do this as well. But for most people, keeping it very simple, again, number one rule, or maybe not the number one rule, but one of the most important rules is do not be all in shitcoins in a bear market. You will get absolutely decimated. And the reality is that the majority of shitcoins that you could potentially hold during this bear market that did really well last bull market, that's why you're holding them, because you think in your head like, okay, well, these things will go down, then they'll go back up, right? I will recoup my investment eventually. The reality is that is less than a 50-50 chance. I would say that is less than a 10% chance, because the reality is the coins that overperform, that outperform, that give those 100x gains or those 25x gains in bull markets are typically never the coins that did that in the last bull market. Even look at Bitcoin. Bitcoin did not perform as well as shitcoins from a growth perspective during the bull market, during the last bull market. It only did a 5x, right, going from 10,000 ish to 50,000 to 65,000. So meanwhile, Ethereum did significantly better. But again, those 25x gains, those are relegated to shitcoins. And if you look at the shitcoins that put on those gains, they were not the coins that did those massive gains last cycle. They just aren't. That being said, look at the performance of Cardano, EOS, XRP in last bull market. Yes, they put in good gains, but nothing compared to the darlings of 2021, like Luna, Avalanche, Phantom. The list could go on and on and on, but those are the coins that perform well because they were new. And so it is very likely that the next bull market, the coins that are going to do exceeding well are going to be relatively new coins, new protocols, new concepts, new ideas, because new projects, new coins, new narratives, they have new narratives, right? They capture the desire, they capture the minds of cryptocurrency investors who want the newest, shiniest, coolest thing, because it's the newest, shiniest, coolest thing that goes up, right? So it's kind of a cyclical effect. Anyways, I digress. Okay, so before we get into a deep dive on the technicals here of Bitcoin, and since we've already pointed out the bullish divergence from the RSI, we'll go ahead and delete that from the chart. I do want to start off today. Let's start off with a little bit of humor. I think this is probably good, right? So you guys know that we are deep into the bear market. If you guys aren't familiar with Gabriel Haynes on crypto Twitter, he's been a source of endless amusement throughout this downside. So, anyways, this is just a public service announcement for the cryptocurrency traders out there moving into 2023, toward the end of 2022.
Good morning! The GBP is imploding! Going to zero! The markets are fucked, and so is your portfolio!
Oh, no.
It may be time to get a job at Mickey D's so you can get out of your goddamn mother's basement! Stop wanking to porno!
Time to get a
and
job.
start getting to work! Cryptocurrency is dead! And everyone that you know that bought hates
it's
you.
hitting too close to home for some.
So go home.
Oh, it's too bad. Oh,
Good
it's
morning.
so bad. Oh, okay, guys. All right, so for real, there's some good lessons in there, right? Listen, like personal improvement, this is a good time. Like, obviously, this is hilarious, but on a serious note, guys, when times are hard, right? You know, I'm sure you've heard the saying, and if you haven't, this is a really good saying. Hard times make strong men, or, you know, like, what is it? Bad times make strong men, good times make weak men, you know, and weak times, anyways, you get the point, right? Basically, generally, when times are hard, the ability to improve yourself and the ability to develop the tenacity, the gumption, the strength that you need to carry a large load, i.e. responsibility, or to have courage to develop new ideas, to develop new novel solutions to currently existing problems. When times are tough, the ability to do that expands. We see more individuals go above and beyond when times are tough. When times are good, you know, we don't actually get a whole lot of new development. So this is a good time for you personally. You know, your portfolio's down. Maybe your trading isn't doing so hot. Maybe you're not doing so well. Maybe you've lost your job or you've taken a downgrade or you're just unhappy with you're currently at. Quiet quitting is obviously above like 50%, I think, based on the latest poll. This is the time and opportunity to improve yourself, whether it's getting better at your time management, whether it's learning a new skill, whether it's learning to develop or code, but I repeat myself because that's a new skill, whether it's finally clearing out your inbox of your emails, either of these things, improving your trading, developing a new trading strategy, finally automating something that you've been wanting to automate for a long time. This is the time to do it. This is the time to do it because what else are you going to do, right? Sit around and watch the corn grow? Like, you know, like there's profit availability in the cryptocurrency markets, but you need to have a dedicated strategy to do it. So put the time in now to build that strategy, put the time in now to build that system that could be with you for a lifetime, to build the healthy habits of good trading, to build the healthy habits of good investments now when the stakes are relatively low, when everything's pumping and there's a lot of opportunity to make easy money, the stakes are much higher. So practice when the stakes are low, develop when the stakes are low, build when the market is moving down so you're prepared for when the market moves up. Okay, breaking news. All right, so the Great British Pound has hit an all-time low of 1.0393. Okay, the trading was halted on the CME GBP futures. So trading has been halted. So this is quite bad. All right, so there is this massive sovereign debt and currency crisis that is looming across seas. It's hitting Europe really bad right now, fed on by the energy crisis. The Bank of Japan, obviously, the currency, the value of the yen to the United States dollar has absolutely collapsed. It's lost more than 40% of its value just this year, and they do not know what to do. They are in complete disarray. So this is not looking good on a global scale. All right, so potentially more pain underway. And Kobe tweeting out this beautiful tweet asking Sam to check the smart contract for GBP because something must have gone wrong. That algorithmic stablecoin has lost its peg, according to Kobe. According to Bitcoin Magazine, Interpol has issued an arrest warrant and red notice to locate and arrest Kwon. Although, interestingly enough, Kwon is still tweeting out as we speak, you know, as of today, replying to Kobe that he's just sitting in his living room doing coding and that all this is wrong. So it's becoming increasingly difficult to know who to trust. But I would estimate that Kwon is likely not telling the truth. GBTC. GBTC is trading at a record discount, 35.18% relative to the value of Bitcoin. So GBTC has never been at a greater premium. Obviously, GBTC or Grayscale has been lobbying extremely hard to be able to convert their trust into an exchange-traded fund. And I think that was their grand master plan all along, to really be able to generate fees off of their financial derivative product right here. But so far, all their attempts have failed. June actually was the last denial from the SEC to convert their trust into an ETF, which actually is now leading them to sue the SEC based on that. So yeah, of course, Do Kwon got hurt. Yeah, when you have all your money in your investment vehicle and then it collapses to the ground, you probably get hurt too. You know what I mean? Okay, so for those of you who don't watch Sunday morning news or Monday morning news, as I do, Giorgia Meloni has been elected the next prime minister of Italy. And I don't want to get too deep into this because I do attempt to adopt, especially with cracking cryptocurrency and what we do publicly, I do really like to adopt a very politically neutral tone because I don't really feel like it is the appropriate place. Because listen, as a founder and an employee of cracking cryptocurrency, what we do stands on its own, right? We develop algorithmic trading strategies for individuals. We educate individuals on how to trade effectively and profitably in changing dynamic markets. And we work with traders one-on-one to make sure that they're getting the results that they want, as well as providing proprietary indicators and automated strategies. And there's really no room in there to take a political side. There's no need for it. But the reason I want to talk about this is because certainly Meloni is considered more of a, I mean, she's on the far right for the cohort that she's in politically. And her latest speech, or the one that's making its way all over Twitter and news, is depending on your political affiliation, either spooky or inspiring. So she's very vehemently talking about how, Italians have a gender identity, a political identity, a cultural identity, a national identity, and that she feels that, and I'm sure this is an opinion widely held in her cohort, in her lobby, that Italians particularly have become marginalized at the hands of financial speculators, i.e. the Eurozone or the larger European financial entities. And this is something that I talk about a lot with my philosophy, late stage capitalism. And we've seen this happen in Europe over the last 100 years, and obviously over the last several hundred years. And that is when times get really hard, typically, and this is true of humans, right? But this is particularly true politically in Europe. So when economic situations get very dire for European nation states, they will tend to move toward populism and elect populist leaders. And that initially, typically, has a positive effect for the country at stake, right? And, everybody rushes to make like the Adolf Hitler references, but I'll just simply state that when Adolf Hitler took office over Germany, he was Time Magazine's Man of the Year, right? He turned the economy around in Europe or in Germany. There was prosperity. There was a new national identity. There was, everybody was whatever, right? There was bad. But then that obviously led to some very terrible things. So what I've noticed in studying history is that when economic conditions get very dire in European nation states, particularly Europe, for whatever reason, obviously I have my insights into this, they tend to elect populist leaders. And that can lead to very terrible things, right? Historically, World War I, World War II, just to name a few. And we know that Europe is in dire straits right now. Like, not only do we have the energy crisis occurring over there, but we're also having a currency crisis simultaneously while there is large-scale quantitative tightening. Yet, again, different states, different nations are taking a different approach to this, with some raising interest rates, most nation states raising interest rates, most countries, most central banks raising interest rates, and some, like the Bank of Japan, actually dropping rates. So either way, I point this out because I just want to be able to look back in 6 months and be like, well, I did or did not tell you so. This is a really good thread. I'm going to drop this link in the chat. I just want to give a shout out here to Corpy. This is a really good thread on Ethereum fundamentals. So he analyzes 10 common takes on Ethereum and why they're wrong. So I will I'll just pick this one. This one's really good. This is a common argument that's made against Ethereum, and that is that Ethereum tries to be everything at once. DAOs, ICOs, DeFi, NFTs. Is Ethereum constantly changing its narrative? And his argument here is that no, Ethereum is simply a settlement layer for digital value, and everything that's built on top of it is just built on top of Ethereum. That doesn't affect, whatever is built on top does not affect the fundamental economic security layer or settlement layer that Ethereum is. And he compares this, does the internet try to do too many things as well, right? The internet does social media, email, e-commerce, gaming, streaming, etc., right? So why is this bad for the internet? Or excuse me, why is this bad when Ethereum is this powerful global settlement layer? And why is it good for the internet? It's not. It doesn't make any sense. It's a logical fallacy. So definitely go check that thread out. And we'll leave this toward the end of the episode when we need to exit with some humor. So, okay. All right. So we went over kind of the big ticket item here, which is the weekly bullish divergence. From a weekly perspective here, as you guys can see, this is the Binance Tether USDT chart. We're just going to be looking at the current consolidation range. The developing value area from the visible range volume profile does showcase to us that we are trading at the lower edge, the lower distribution area of the developing value area, which I want to point out, this is very important to note. Notice how it is contracting. We see that the developing value area is getting closer and closer to each other. And this is exactly what happened back in 2018 as we consolidated sideways at 6K before the ultimate plunge to 3K and found the bottom. At the time, the 200 weekly simple moving average, we're far below the 200, not far below, but we are trading below the 200 weekly simple moving average now. So we are in relatively new territory for Bitcoin. We've never seen bearish technical activity like we are currently seeing. And the scale of the devastation that's been wrought to Bitcoin holders and cryptocurrency holders in general has been the largest dollar for dollar value that it's ever been. More money has been wiped off the market capitalization has ever been before. And, you know, along that size, I mean, the crash in assets globally is reaching historic proportions. So bond markets are obviously showing the largest losses. Most people don't realize this. They should, but most people don't understand basic economics. So bond markets absolutely dwarf equity markets in size worldwide. The value of global bonds just last week plunged $1.2 trillion. That's trillion with a T, not a B, trillion with a T. $1.2 trillion in global wealth was annihilated last week alone in the bond market. And overall, total losses from the bond market since its all-time high in the summer and back in 2021 is $12.2 trillion. That is the total global wealth that has been absolutely evaporated just in the bond markets alone. Overall, if we add up the loss in wealth between bond markets, credit markets, equity markets, and crypto markets since the 2021 all-time high, it is $30 trillion in global wealth that has been annihilated. That is 30%, by the way, that's 30% roughly of global GDP, not America GDP, global GDP. 30% of the world's gross domestic product or wealth produced in a single year has been annihilated since 2021. That is no small thing. Okay. All right, so we'll go on to the daily chart. So Bitcoin is still trading in a clearly defined range. After we rallied, I had the little bear market rally up to 24,000. We're going to look at our developing value area and volume profile here. Just in the current range. That's very important. We don't want to take in the volatility of the dump. We want to look at what's happened after that. What are we doing right now? As you guys can see, with very few exceptions on the daily time frame, there have been really no profitable daily time frame trades, with perhaps the exception of maybe this small movement here and maybe this movement here, capturing some profit. Definitely the only way to take advantage of these breakouts above the daily value area is on the hourly chart, perhaps the 4-hour chart, but I personally like to use the 45-minute chart for my swing trading and for trading patterns like this, especially in a crab market. But also notice the bigger picture here. Any significant and insignificant deviations outside of the value area has been met with a reversion to the mean or a reversal in the micro trend from the macro trend. So we are in a range. Range trading strategies are going to be the cream of the crop here. For those of you who don't have an effective range trading strategy, 3 Commas has good grid trading strategies that you can simply plug in. I have been running 2 of them over the last few months. They're working quite well. I do like them. It simplifies the process. It's very simple. You can establish a range. They also have an AI system that will establish the range for you. and it will simply buy low and sell high. That's the goal of it. I do my own modifications to actually short high and cover low, but I digress. So the key point here is that significant deviations outside of the value area have been met with rejection back into the value area. And what this tells us is that there's no clearly defined trend. There is not sufficient momentum. There is not sufficient open interest or capital that so far has been able to push crypto, Bitcoin in particular here, into a significant trend outside of the established range that we're in. Ranges are good. They're very clear to trade. You buy the bottom, you sell the top, you sell the top, or you short the top, you cover the bottom. And then you wait until you see significant acceptance. I covered this topic last week on Friday's stream, this concept of acceptance. Acceptance is when you have a clearly defined range, and you can identify this either through studying order flow, visually looking at the chart and identifying support and resistance. Personally, I really like the volume profile. The volume profile lets you know where action is happening and at what volume, i.e. volume. Haha, you get it? So when you see price being accepted, i.e. staying and being fairly traded without a lot of volatility, now outside of the range, that is a sign that traders or the market has decided that it is now fairly valued below the previous range it was at. And if it's below, if price breaks to the downside and is accepted below it, this is quite bearish, as often price will continue in that direction until it finds a new liquidity low. If it breaks out to the upside, obviously that's quite bullish because it will trade upside until it reaches resistance in the form of a liquidity resistance. So, I will note that on the daily time frame as well, we do have some bullish divergence in the form of Minx, our preferred proprietary momentum oscillator here. So Minx is obviously making a lower low on the daily and a significantly higher low on the momentum oscillator. Yeah, overall, I find that very hopeful. So we have weekly bullish divergence coming in from the RSI, and Minx is showing it, just not as clearly as the RSI. And we do have the daily bullish divergence coming in here from the RSI. Now, I will note that it does appear that we had, let's see here. We do, I mean, it is very, very slight. No, I'm not even going to call that bullish divergence. We did get some follow through. Notice that our basically our retests of the lower end of the value area are so far have been met with retests of the upper value area. So just looking at the chart right now and utilizing high volume nodes that are being showcased to us from the volume profile, we do have some very clearly defined upside targets for taking swing long trades out of this range, which would be my recommendation, looking at the risk to reward ratio. So you can either set your stop loss directly below the current low. You can use Quadriga ATR, which is our proprietary stop and target system. Just make sure you set it to long and not short. Currently, Quadriga ATR is recommending a stop loss, which is relatively similar to using the current swing low as a stop loss, 17,716 to the upside. Now, keep in mind, if you are targeting Bitcoin's balanced price per our valuation models, that is going to bring up a little bit of discrepancy. So over here in Glassnode, just a second. Obviously, we've been covering our valuation models, our on-chain valuation models through our Glassnode dashboards. And of course, we do have the three metrics that we've been using for quite a while to determine bottoms and to the reverse tops. But we are trading below our realized price, which did offer some trading opportunities here. Obviously, price plunged below it and then rallied slightly above it. So it did act as a nice median of price. Currently, it's acting as resistance. And to the downside, we have Bitcoin's balanced price, which currently is sitting at, hold on, let me get the latest reading, 16,741. And our delta price is at 13,235. Those are our two downside targets in the event the Bitcoin does end up breaking support here and we do end up plunging lower. So as I said, if our stop is setting at the high 17s, perhaps that's not as difficult to reconcile if you are putting on short positions for protection. If you have options trades, which is what I'm doing, then it's not that big of a deal. By the way, for the premium members, I have updated our option signals and added a call calendar spread for Bitcoin. So make sure to go check that out in the option signals channel for premium members. Now, hold on just a second to adjust this. Okay, so what I'm saying is if you have a stop loss for your swing long trade in the high 17s, but your downside target is the low 16s, again, I typically like there to be a little bit more variation in distance there because, perchance you would be, actually, you know what? I do have the solution. It's very simple. You're not going to wait until your stop loss gets hit on your long to be flipping positions and taking a short. As I've been very clear about, if we open and close the daily below our current level of support, then we need to be targeting downside. Targeting downside price targets with momentum shorts or breakout shorts. So that could be, ideally above our stop loss at the high 1700, 17.7. And so if we do end up losing our support here at about 18.6, we do need to be targeting that balance price and potentially even that delta price for the final 50% of our trade. And then we'll just be closing out a losing position if we do end up having something like a Wyckoff spring here and price does reverse and move to the upside. Alex has a good question here in the chat. He asks, do you use stop losses in your grid bots? I don't, because if you catch those capitulation wicks, the bid, it's going to grab a lot of profit, but it's risky. So I do not. With my grid trading system, I do not use a stop loss. What I do is I essentially use my liquidation price on the assets that I'm trading as my liquidation. So again, that might not be the right strategy for everybody. Depends on how well you are at managing your capital. But essentially, I just set aside the amount of funds that I would be willing for the strategy to lose. And the way I determine that is by making an estimation of the potential profits based on my past experience with grid bots and the data that is currently out there on grid bots. You can obviously also just take the market data that's available for your asset over the last, let's say, few months or the time that it's behaved in the range. And then you can go analyze the market the last time it was showcasing that ranging behavior. So you could go back to so you could go back and find the time in Bitcoin's history when we last kind of looked like this. A lot of 2020 looked like this for Bitcoin. A lot of 2018 looked like this for Bitcoin. Some elements, some parts of 2019 looked a little bit like this, but a little different in 2019. 2020 showcased this very well. So in fact, a good chunk of 2020 looked like this. So you can simply go back to those areas and back test specifically those areas and look at how often the grid trading system would have executed a strategy, based on the range of that grid bot. And then you can figure out your potential profit based on the amount of trades. So I use that to estimate what I would be willing to lose, giving me a good risk to reward ratio. And then I set it up. So, but again, multiple ways to do it. Yes, of course, one of the big dangers in automating any strategy in cryptocurrency, especially a DCA buy low, sell high bot, is where to put your stop loss. Because you want to be playing these big moves and you want to be setting your stop loss far enough away that you're not getting wicked out. However, you also want to make sure that you get stopped out if the market is really crashing. It's a very tricky, delicate aspect of trading. That only time and personal experience is going to give you the ability to kind of muscle through. All right. Yeah. So did I discuss this? Let's talk about our upside targets here. Since we are at the lower end of the value area, we have upside targets in the form of 19,802. That's the current point of control. And I think it's very important to watch. I do expect us to rally up here and at least test this point of control over the next few days. Now, it is important to note that the Federal Reserve openly met this morning and spoke, and they will be doing so again tomorrow, and PCE numbers will be coming out on Wednesday. So we have some bullish catalysts. Now, I did listen to a bit of the Fed talk and read the recap on Crypto Twitter, and they did seem to walk back a little bit of their rhetoric, which is very bullish for the markets, and why the markets are likely responding positively today on top of the technicals of where we're at. So the Fed walking back a little bit of their hawkish rhetoric, maybe tomorrow they double down on that. That would be great. And then if we have good PCE numbers come out, then we could actually get some really nice upside here moving through into this week. Because other than that, there's not too much coming up. Of course, we do have some big looming bad boys, which of course is going to be interest rate decisions by the Bank of Japan, some action by the UK on their plummeting GBP, and then the evolving credit crisis in China as well. Who China just recently, I just heard the announcement this morning that they have ordered their banks to begin purchasing stocks so that they can stop the selling of stocks. So interesting when you have a state-run economy. So yeah, long directional trades here. Upside targets very clearly well defined by the volume profile, just targeting high volume nodes. You can of course try to be savvy and target slightly underneath those high volume nodes, so that if price ends up not being able to get there, you're able to exit your positions. Okay. Other than that, not too much. If we do go, I did of course always monitoring open interest and cumulative volume delta. And here's the thing, they're not giving a very clear picture and very clear direction, so I'm not recommending any intraday positions based on this data. What's interesting is, so after the recent low, we rally up and then we kind of move sideways and form a lower high. And notice that throughout that period, open interest is on the rise. Okay, through all this down cycle, open interest is on the rise, indicating that new traders are putting on a lot of positions. And cumulative volume delta is in a downtrend, indicating that throughout this whole area, open interest is rising, and the majority of that open interest was new shorts putting on positions. And then we have some really bizarre, not really bizarre for Bitcoin, but bizarre market activity here. I mean, just the market's getting pumped, right? The market is just getting absolutely just pumped, and then those positions are closing. Positions are getting closing. And as you can see from the short liquidations, what essentially happened is a lot of shorts got put on, and then just some large players came in and just absolutely shot the market up and began liquidating them, with the most violent liquidation occurring right here on the second to last pump. So usually the problem is, usually when I see that shorts have been wiped out, the market, the direction the market usually goes then is down. The idea here being is that you had a lot of kind of sharks, which are medium-sized traders and guppies, layering on Bitcoin positions, correlating to the rise in open interest and the decline in CVD throughout this area. But then for some reason the whales came in and were like, fuck you guys, pumped, grabbed their liquidity, and then they take the market down. They're not going to let these guys profit. They need their liquidity so they can profit. That's typically how the market works. Obviously, as you can see here in the micro, we are forming higher lows with relatively equidistant highs. And this is usually what a breakout looks like from price action. So this area is very strange to me. The price action, again, the price action here is actually quite bullish. Higher lows, equidistant highs, continually testing that level of supply, and just unable to be driven down lower. Demand keeps rising higher, and eventually the liquidity here is going to break, and price will likely move to the upside. Meanwhile, the data, the open interest in CVD data is overall bearish, and then obviously this market action to push out the shorts is also bearish as well. So again, I would be obviously very much closely eyeing a breakout here at about 19.2, and then just using like the recent, like one of these swing lows as or range lows as a, not even range low, current low, one of these lows as your invalidation and stop loss. But because all of this is very unclear, I'm not taking any intraday positions on this, and nor do I really think you should either. Okay. Ooh. All right, so that's about it. In summary, on the daily time frame, we are obviously favoring long swing positions here to retest resistance at the upper edge of the value area distribution with clearly delineated targets in our high volume nodes on the way up. Macroeconomically, things do not look great. That's why we have significant downside protection. I would not listen to the noise on crypto Twitter. People are just trying to get clout and make big noises and whatever. It's fucking stupid. Just pay attention to your strategy, follow your own mind. We'll do a quick breakdown of the trade of the day. For those of you guys who are watching on Friday, I called out a COTI, a COTI short, live on stream. And then I posted, again, I just took a small position. I posted the update to that on Twitter. That trade was a good winner. Did exactly what we wanted to do. Price basically stopped exactly where we entered our short. And again, we came to that information by identifying COTI as a altcoin of interest due to its extremely high 24-hour change in open interest, which is usually our first step in looking for profitable positions, or our first step on our altcoin scanner. And then we simply pulled up the chart and analyzed cumulative volume delta and open interest to see that price had pumped, but open interest was significantly on the decline and the shorts were layering in. We took our entry, set our stop loss, and targeted high volume nodes in the downside distribution, and successfully hit both take profit targets. I did the exact same thing yesterday to the premium trading group, posted an Ethereum proof of work ETHW short. We'll go ahead and duplicate. Now, I will notice, I have noticed that Bybit, the lower tier or like newly added perpetuals on Bybit are not, their prices are incorrect on TradingView. TradingView is showing incorrect price data. So definitely favoring Coinalyze for analyzing these relatively new markets. Yeah, so Let's go. I still have my trade open. So we had an entry price of 12,775. I think I actually got the group in at like a slightly higher price at about 12,995. So yeah, this is where we entered into our short, right up here on yesterday. So right up here in the upper distribution range. And again, fairly clear to see, guys. You know, ETHW pumped, declined to move sideways, came back up, retested resistance, and then was on the decline. So that's when we entered. And here's the thing: open interest began spiking massively right here, and look what cumulative volume delta does. It just falls off the face of the planet. Normally, when an asset is pumped up really high near its high, and funding is this negative, the market's going to move down. The market's simply going to move down. Whereas the rise in open interest and the decline in cumulative volume delta just confirm that. So, but typically, anytime if you're seeing a shitty altcoin and it's pumped up all the way up here and it's near resistance, and funding just flips extremely negative, the market's going to go down, and the market did, of course, go down. So we have hit our first take profit. Let's just double check. We did hit our first take profit. The rest of the position is still riding and open. You're free to take your profits. I'm going to go ahead and probably let this run. If we do break this high, I'll consider discretionarily closing the position out. But yeah, so that's our trade of the day. Just simply identifying opportunity from a pump and then an inability to reach the high. We call this a swing failure pattern, where the market makes a high and then is unable to make a higher high. And again, you can obviously notice how the classic way of taking this trade, the way that if you went on to like Investopedia and like read swing failure pattern, it would tell you that, you make a high, you establish a low, you're unable to make another high. And then the confirmation of the trade happens when you break down below that low. So you'd actually be, if you listen to Investopedia, you'd be entering the short here. And obviously, as you can see, that's the like absolute worst time to enter the trade. You have to short high and cover low. And you can achieve that by analyzing you can achieve that by analyzing this type of data. Jordan Stott's asking if I killed it on ALG. Are you talking about ALGO? Is that what you're talking about? You just missed an O there. Yeah, doing really well on ALGO. So I took, it's been a long position for me. Let me actually pull up our premium trade tracker. So, okay, so yeah, here's the thing. So I'm actually, from a pure market value perspective, like what's the price of ALGO relative to the price when I entered the trade, I'm actually down 2.28%. But because of the way the trade is structured, because I'm taking advantage of Folks Finance ALGO liquid governance, I'm guaranteed 19% on the trade. Okay. And then I compounded that because I also borrowed against that algo and farmed USDT, FUSDT. So overall, this means I'm up 17%. So as long as the price of algo doesn't go below 19% from where I entered, it's just guaranteed. I'll get extra algo. And if the market responds positively here, again, this actually, this algo P&L has actually been up to, like, I think we were up like 25% at one point, which would have been a 25% on top of my 19%. So not bad. Right now, the market's come back down. We're roughly at equilibrium. So I'm happy. I'm perfectly fine as long as the price of algo doesn't decline by 19% by the time I go to close my position out, which I'm locked in. There's about 4 more days left in the trade. 4 more days left in the trade, September 30th. They'll begin distributing algo liquid governance rewards. And then I'll be able to unstake, get rid of the G algo, sell my algo, and be done with that baby. So, okay. Good stuff. Good stuff. Good question, Jordan. Good question, man. G asked where to find the screener. Let me check our Twitch chat. Make sure. Okay, I don't see anything from Twitch. All right. Sorry. I know sometimes I ignore the Twitch chat. I don't mean to. You guys are amazing. This is app.laevitas.ch is where you can find the screener. And then select your exchange. Sort by change in open interest, right? So you want the big numbers at the top. You want descending order, right? So I just select Bybit, change in open interest. So we can see what are the opportunities today. It's LUNC, LUNC, IOTA, Luna 2, Woo, Didex. Although I would ignore these. Like, notice how we just drop off with the 73. So this clearly shows you what the market is interested in, right? The market is interested in Loon C, Loon 2, and IOTA. Right? That's where those are the opportunities are. It's up to you to determine what the opportunity is. Is it to short it? Is it to go long? Are we in a trend? Are we going upside? I leave that for you guys to figure out. So we will be taking a look at the top one here, which is Loon C. So let's see if we can identify a profitable opportunity here, guys. So again, you guys want to be careful charting this shit out on Bybit, on TradingView, all right? Because look, we'll see. Like here's, let me, yeah, second, we can get rid of this one. Let's see. Okay, so here we can see that the prices are similar, but I've very frequently been noticing disparate prices from TradingView charting USDT altcoins, whereas Coinalyze must have a much more reliable data feed. So anyways, I did not put a ticket into TradingView. Sorry, I probably should have. They usually listen to me. I just got a lot. I got a lot on my plate this week, brother. What was I doing? Okay, all right. Loon C. Go down to the 30-minute time frame, and let me pull this out for you guys. So you can see a little bit more clearly. All right, so let's just kind of go back here a little bit. We can see that as Loon C is declining in this beautiful, probably short position, open interest is rising. And what's interesting here is that cumulative volume delta is pretty much crabbing it up, indicating that just as many shorts as longs are entering into positions. However, it's market order flow that is pushing price down. Open interest begins to change its trend, roughly, but also notice the open interest is rising. CVD is going sideways. Here, the market takes a trend as we get toward the end of the downtrend, and open interest spikes up, declines a little bit, and then we start having this massive rise in open interest. This is your big warning sign. And then obviously we have this huge spike in CVD right here, and this big spike in open interest, which is your warning. The pump is coming, and then we obviously have this huge explosion. So very positive to see open interest has not fallen off the face of the map. Now, typically my maxims that have served me very well in trading altcoins like this and pumps like this is that if you get this big pump out of nowhere and then price moves sideways, it's usually down only. The reason why is because typically when you have a big pump out of nowhere, not a lot of traders are able to position themselves for it. It's the few, the proud, the brave, the savvy that are able to actually take advantage of this movement because they were able to buy in here. And so they're going to be offloading. And so why is the market moving sideways here? Why is open interest continuing to rise? And why is CVD moving sideways? Because typically what we're seeing here, what we're going to see here after a big pump like this, two things happen. And I've said this many times. If you get a big pump and then an immediate dump, then buy the dip, because there's going to be an aftershock pump. It's what I call them, aftershock pumps. And usually I take it back up to resistance. That's almost a banger trade, almost always a good trade. Now, in the event where price pumps out of nowhere and then moves sideways again, it's usually down only, because what's happening is that those who bought here are distributing their coins all over the faces of all the retail traders who want to come in and buy this up, and they're grabbing their liquidity up, and price will probably decline. Now, interesting to note that this can be further refined by identifying and analyzing what open interest and cumulative volume delta are doing. Cumulative volume delta is clearly showing that the buyers are not in control over here, that the buyers and sellers are in equilibrium, and open interest is rising, which means there's more active interest coming in. So open interest has not completely collapsed, meaning since CVD is moving sideways, shorts are opening up just as much fervor as longs. We have to see how this battle plays out. But again, notice how funding has spiked massively negative. Again, what did I say? Usually if you see a market that's pumped and at resistance and you see funding like this, it's usually going to go down. So if I just had to put my stamp of which way to trade on this, I'm not going to be taking a position on this because it's not super clear with CVD and OI, but I would be taking this to the short side. So again, taking a good pump on this, I would be using this range high as your invalidation point for your short. Stop loss timeout will prevent you from getting wicked out. Yes, Alex, all over their faces. That's how it always happens. And just go bougie for it. So yeah, shorts have been absolutely wiped out. Usually the market moves down. So that would be my opinion on this. Loon C to the downside. But again, there's also something to be said for narrative. So just watch this closely. Any breaks to the upside that have a resulting rise in CVD and rise in open interest, I would not be fading that. I would probably be taking that to the upside because that's indicating that the narrative is strong enough for new traders to come in and push capital into the market and take it up high. I'm talking way up high. I'm talking higher than the sky. Ooh, ooh. All right. Yeah, over the last hour, again, LoonC, Hex, Nexo, IOTA doing well. And again, remember, IOTA IOTA was the number 2 interesting in open interest. So I would like to go check out IOTA. IOTA looking really nice here. Okay, IOTA looking really nice, breaking out of the value area on extremely high. What the fuck volume? Okay, closing above the point of control, looking like. And so, you know, usually, again, remember the range trading strategy here. If we get to the upper end of the distribution, we typically want to take price short. But look at that volume. I mean, what in God's name? Soon we will trade in rubles, comrade. 10.32 million. That's Millie with an M. All right. Millie's also the name of my dog. Volume. I mean, that is psycho. Psycho. Let's go look at IOTA. DY. IOTA USDT per Bybit. Give me the data. Show me the money. Show me the money. What's going on here? All right, so so this is a completely different chart. This is a completely different chart. Look at this. Look at this. This is clear. Now, look at CVD. CVD clearly on the rise right here. CVD buyers are in control. Open interest beginning to spike back up just now. That's just in the latest round of buying. That is right there. It doesn't look like much, but that is a 7% increase in open interest. This candle, an increase in 7% open interest. That's massive. Buyers on the rise, shorts getting liquidated. Oh, God, you know, fucking tricky though, you know? Doesn't mean it's going to break out. Doesn't mean it's going to break out. Okay, so let's start at the beginning here. We have this much more natural organic rise in the appreciation of IOTA. Prices moved sideways. We do have an initial decline. You can see the sellers step in here while the open interest declines. So this is profit taking, very natural. Sellers are in control while open interest declines. So this is longs taking profit. But then again, the buyers step in here and they don't give up. All right, the buyers step here and they don't give up. And there was only a decline. There was only a 20% decline in open interest, and we just pumped 7% back in here. I don't obviously like to see shorts getting liquidated on the initial breakout pump because, again, that indicates that they're just using a lot of leverage, and usually that means the market will move down. But listen, God here, my almighty. Yeah, that's a tricky one. I mean, that's... You know, I haven't seen a breakout trade that I've actually wanted to take for a while, but that looks good. So we're gonna obviously go back to our first principles here, right? What do we talk about when it comes to ranges? What do we want to see? What do we want to see on a confirmed break of a range? We want to see acceptance. Okay. Okay, so mark this out. Nope. You know, Alex, I won't accept that at face value. I would firmly push back against that. No, dude. Like, a lot of people like just come in and shit on TA and think like TA's made me a ton of money. Period. TA's made me a ton of money. TA, I have helped teach the correct way to interpret a chart, or a consistent way and disciplined way to interpret a chart. Yes, it won't tell you everything. TA is not magic. It's not voodoo. It will not tell you what something is going to do. It gives you an edge. If you have the macro on your side, if you have the fundamentals on your side, and you're in the right place at the right time, the technicals give you an edge, and an edge is what you need against the other market participants. Shitting on TA is ignorance, dude. Period. There's data here, and you know, you just have to understand how to analyze it and interpret it, and that guides your financial investment decisions. That's all it is. Period. It's a tool. It's a tool. It's not magic. But it is an undeniably powerful tool. And, you know, It's just really easy to dog on something that seems complicated, right? So I would, again, firmly push back against that. I see that so many times, and I see people who are TA artists or chartists or traders, not push back against that. And again, you're just wrong, dude. You're wrong. All right. But again, you're welcome to stay. We do value dissenting opinions. I don't have any negative opinion of you. I understand where you're coming from. You're completely welcome. But not like you're welcome, like I said, like I'm implying that you should thank me, but you're welcome to stay. Not targeting you. Okay. Oh, stretch. Oh, stretch. Oh, guys, don't jump. No, let's not hate on them. Let's not hate on them. Everybody's free to their opinion, and sometimes dissenting opinions, they make us reevaluate the way we think, and that's good. And, sometimes a common enemy brings everybody together. But definitely require that we treat everybody in the chat with respect and decency, even if we disagree with them. All right. Okay, so that line that I put on the chart is coming from the value area, and I just kind of zoomed out. This is good. I want an objective metric that I can measure off of. All right. So we are at that level of resistance right now. So obviously, what do we want to see? Look what this is really cool to see. Look what Minx did. 30-minute time frame throughout this area. Minx pulled back, came right back down to the 0 line, which is our bull bear marker, right above the 0 that we're typically biased to the long side, and below we're typically biased to the bear side, to the short side. We had a nice indicator reset off of this pump, a nice bullish crossover right here. Look at that bullish crossover came in on this candle with rising volume. So those who are using Minx on the lower time frames here on the 30-minute time frame, 30 and 45 minute are my preferred. I really like the 30-minute time frame for day trading, and I like the 45-minute time. It sounds funny, it's only 15 minutes, but I like the 30-minute time frame for day trading, and I like the 45-minute time frame for swing trading, right? Listen, you will understand. You get it if you get it. You know what I'm saying? So I'd really like to see this close above here, and I think this is worth punting for a long at, right? Let's just kind of structure this trade. Because listen, again, the open interest is here, the money is here, so the opportunity is here. We might not always get it on the first crack. You know what? I want to be pretty aggressive with this. So again, if it's a breakout trade, it's a breakout trade. We want immediate invalidation. So this is what I usually do for breakout trades, guys. This is what I do for breakout trades. Is I like to use tight invalidation. Let's make sure we have the right tight invalidation. That was a little wrong. All right, tight invalidation, 1-to-1 risk to reward ratio on the first TP. You hit that first TP, you move the stop loss to break even, and you get a runner. If you get a runner, you're pulling in X-sized profits, right? Outsized profits, and with relationship to your risk. Okay, so if we're using, it doesn't matter what the percentages are, right? It doesn't matter how far away percent-wise. Here, in the example that I'm giving you, which is probably what I'd like to use, 3.41%. Distance to the stop loss, 3.41% at 1-to-1 risk to reward ratio to the take profit. That means if we risk 1% of our account on this trade, or 2% of our account on this trade, we hit our stop loss, we lose. Let's just use 2%. If we hit our stop loss, we're going to lose 2% of our account. If we hit our take profit and we exited all of our position, we would gain 2% on our account. But here's the thing. So if we take 50% profit out at the first TP, move our stop loss to break even, that means we have immediately cashed in a 1% increase in our account balance, right? Because if we take half off at the first TP, we get 1% instead of 2%, right? At 2% risk. Or in the event that we're using 1% risk, we're going to get 0.5% increase to our account. But if we get a runner, that runner could be 5, 10, 15% increase to your account balance, right? And this is this is the whole point of PTP. This is why we take 50% off at TP1. We lock in profits, right? Now that initial lock-in is at odds with does give us a less profitable or less favorable risk to reward ratio, because our stop loss is still going to be taking out twice as much of our account than we would be getting at our first TP. But we open the door to outsized profits in the form of runners, right? Let your winners run, right? The only way you can let your winners run is if you have a clear way to do that. And the biggest struggle I see traders have with letting winners run is they're just so nervous to lock in some profits, and they haven't done that. So that's why our system completely gets that out of the way. You lock in profits, it's done. Your stop loss is in a place where you can't lose money now. You've already locked in money. So psychologically, you can now let the rest of the position run. You can even let it come back to stop loss. It doesn't bother you because you've already locked in money, profit, money in the bank, account balance grown. Who cares if you don't make as much as you wanted to? That's the point. But opening that door to outsized profits opens the door to outsized profits. I don't know what you want me to say. Thank you, Zan. I really appreciate that, man. Yeah, it was the biggest eye opener for me in my personal trading. Okay, so I just heard my girlfriend from the next room. She's starving. I'm starving. We gotta wrap up the stream. Okay, so I really like this. I really do like this. Yeah, I don't know what to say. I really do like this. Yeah, open interest is. You know what? Listen, you guys know my rule. If I spend too much time staring at a chart and I don't have a clear answer, you do nothing. Right? That's the point. You don't do anything. So 1% up, 1% stop loss. Am I 1% up? I take out 50%. Yeah, okay, so hold on. Let me just be let me summarize that for you, Sam. It doesn't matter what the distance is. So in this example right here, the trade that I've structured for IOTA, from entry to stop loss is 3.41%, and it's the same distance. So it's a 1-to-1 risk to reward ratio, as far as the risk to reward ratio structure is. So price has to move the same distance to hit the take profit as it does to hit the stop loss. Note that, anyway, never mind. I'm not going to complicate it with what I do in the daily time frame. So if you use something like a position size calculator, which is the tool we provide to everybody, or what we teach people to do, you want to structure your position size in such a way that if your trade hits the stop loss, you will lose that, your X percentage. So we typically use 1 to 2% of our account. So let's say you have a $1,000 account. If your stop loss is 10% away, and you want to risk 1% per trade, then you need to use a $100 position size. I'm getting in the weeds with the math, but you can pull out a calculator and double check all this, right? Because $100 is 10% of your trading account, and a 10% loss on 10% of your trading account would be 1% of your total trading account. So you can just pull up position size calculator. We have a really good one in the group. But again, we calculate all of our position sizes to stay within our risk tolerance. But anyways, the point here is that you use a position size so that you know exactly how much money you're going to lose if you hit the stop loss, and how much money at a 1-to-1 risk to reward ratio you would make if you hit the take profit. Wherever you put your stop loss, wherever you put your take profit, it doesn't matter. For me, for 30-minute breakout trades, I do use a 1-to-1 risk to reward ratio. And at the first TP, yes, I will close half of my position, or 50%. The stop loss will move up to my entry price, and then that's it. And then I will let the trade run. Now, there is a little bit more to it there. I will use a momentum oscillator like Minx, or an exit indicator, we call them, to let me know when to close the trade later on. But again, everybody's going to be different. You can just use your intuition. You can use levels of resistance. You can use high volume nodes. You can use RSI crossovers. You can use the MACD. You can use whatever you like. But the point here is, and what I think you're gravitating to, is the idea and the concept, and it really changed my life in trading too, is this idea that, if I have a winning trade, and I think, it's possible that price just keeps like going up or going down if you're in a short, like I want to take advantage of that. I want to catch the big move, right? But it's so hard to do from the beginning, right? To like hold that position, especially if price moves in your direction and then comes back up to your entry, and you're like, oh, like, am I going to lose money now because it's going to go the other way? Yeah, so you just take some profit off of the first TP, move your stop loss to break even, and then if it runs, it runs. And if it doesn't, okay, well, you already made money, right? You just didn't make as much as you wanted. So, all good. Thank you, man. I appreciate that. Really good question. All right, okay, 4:35. We got to head for the door. Before we leave, you know what? I'm not actually going to play this whole thing. I'm just going to drop the link into the chat. There we go. And Bob's your uncle, as they say. This is just, it's a funny one, guys. It's a funny one. Made it to Bitcoin Island or Bitcoin Beach. Hopefully you guys enjoy this. Okay. Make sure to check out today's market analysis. Links in the description down below. I go into more detail on the TA that I go over and what we're seeing macroeconomically as well. I also introduced, which I didn't have a chance to cover in today's episode, but I'd cover in detail on the blog post, is this concept of using Bitcoin volatility and a specific ratio of Bitcoin volatility. And I explain in here how to boot this up onto your TradingView chart to give you a volatility-based trigger on when to enter and exit Bitcoin positions, specifically Bitcoin positions. This really won't work with any other asset except as maybe, I mean, listen, it does tend to work if you use it as like a macro fundamental trigger for altcoin trades, because typically everything moves up and down together in a sense. But again, it's specifically for Bitcoin. I've used this in my Bitcoin trading a lot. So this works very, very well with Bitcoin trading. But anyways, go check that out. If you guys have any, well, we'll go over to the big chart and then we'll say all that stuff. Not the big chart. Did he say the big chart? He meant the big camera. Thank you guys so much for joining me for another episode of the Breaking Bitcoin Market Update. As always, you guys are amazing. I love all the questions. Thank you for the support and the comments in the chat. If you guys would like to support the show, please leave a comment down below with questions, comments, concerns, sarcastic remarks, hot stock tips, death threats. We take them all. And if you guys would like to support the show in a more substantial way, please hit the thumbs up button and subscribe if you haven't already so you never miss an update. If you would like to improve your trading more, you can check out all the services that we offer professionally at crackingcryptocurrency.com. Otherwise, we will be back tomorrow with another Cracking Crypto update. You guys trade safely, emotional discipline, risk management, pay the bills, all that stuff. Yeah. I love you guys. I'll see you tomorrow. Cheers.
Thank you.